Buddy, good afternoon. Today is the 17th of March, 2024. Happy St. Patty's Day. I hope you guys have some plans, and hopefully, after you watch this quick video, you guys will get out there and live your best life. So, I'm rooting for you guys. Just make sure that you have a great day, but also be, responsible, right? I want to see you back on Monday. Let's have a good time starting next week. We are covering the 17th going through the 22nd of this week. We'll be going over some of the major U.S. economic reports and Fed speakers coming up. It's a pretty light week, honestly. And as we keep talking about, the earnings are getting lighter and lighter. So I am expecting a little bit more chop, and overall sentiment is still what it was last week. The high is in for the rest of the quarter until I'm wrong. And disclaimer, I'm not saying, hey guys, let's short the market or anything like that. I did start some shorts that I covered on the QQQ, close those out for some profits. And then I bought some way out of the money with time on the SPY put side. And again, my overall sentiment though is extremely bullish with these small pullbacks, and so far this year and even since October, those pullbacks have been very, very light. So please understand that. The next thing that I want to say before we get started, please give this a like, this video. But second, very, very important, is that this broad market analysis has been something that I've been doing for many, many years and putting it out here on YouTube. And I really didn't start to get serious about YouTube until maybe when I came over to simpler trading. I started, kind of ramp it up and make sure that I put more videos on here and so forth. But I have decided after this week that the broad market analysis, the majority of the broad market analysis, will be put only here in our room. And what I mean by that is that it's not going to be out on the public. It's going to be primarily that way when I'm teaching and some of the things that I'm teaching. I just want to keep it here in the trendy family here at Simpler Trading. I will put out several other videos, here and there about different trade plans that I'm looking at. So I'll keep doing that. But this I really want to make it just about the trendy room here, so that if I want to talk for 45 minutes, I can. If not, not a big deal. So again, my disclaimer is this will be the last week that I'm pushing it out here as, I guess, just our Sunday video content. That way, my responsibility is just right here in the room itself. Okay. So let's go ahead and get started. Let's make this pretty simple, pretty straightforward. The first thing we'll note is that this week, starting in on Monday, we are going to have not much, just home builder confidence coming in at 10 p.m. or 10 a.m. Eastern. And then on Tuesday, again, pretty light housing starts and building permits. And then Wednesday, this is what it was all about. I felt like last week overall, my analysis for the week was spot on. It was choppy. We did make lower highs, and that's exactly what we expected, right? And I believe that we were setting the tone, getting ready for FOMC and Fed Chair Powell on Wednesday. So this is the big event. And again, coming into Monday, Tuesday, I'd expect it to be pretty light. Uh, Potentially a relief bounce. We'll be looking at some ES and Nasdaq future blueprints to give us a better look at what I'm expecting. But that's what I'm thinking before we head into Wednesday. And then on Thursday, initial jobless claims, Philadelphia Fed manufacturing survey, some PMI, and then on Friday, once again, nothing really scheduled. Moving on down here, earning whispers is what I use to track earnings. And you guys could see here when I zoom in that I have underlined the names that I'm interested in, but please take note of these. Please understand if you're trading something that is lined up with these names, or they have some kind of um, relationship with a name that is going to report, be aware of that, okay? So, for example, over here I have PDD, Micron, so all this on Wednesday, Chewy. I have a long term position that I put on at the beginning of the year. It is a leap trade, I believe, and Chewy, I am long on this. So I'll have to decide before Wednesday what I want to do, if I want to take some of those positions off or if I want to hedge with some put debits. But we'll talk about it later in the week. The next thing that I'm interested in is KB Homes. Always want to know what's going on out there. And then Five Below, great name to also trade. And then we have Signet. Not a lot of people talk about this name. I'm really interested in the insignia. This is jewelry, like K's and Jared's and all those different jewelry shops that are out there. This is them, okay? And with gold hiking up and pushing prices up to the upside, I'm really curious what their outlook is and how they're doing. This is a stock that is explosive and has been explosive since 2020. It's been doing really, really well. I'd encourage you to go out there and check out the chart. Next thing that we're looking at is on Thursday, we're looking at Nike, Lululemon, FedEx, and that's pretty much what I have underlined for this coming week. Now, let's go ahead and go into last week's neutral. And again, guys, I'll take you to a Thinkorswim chart here in a few minutes. Don't worry if this looks blurry. The idea here is that you just get the idea of a couple of these things. This was our neutral results from last week. That means this thing was an actionable trading chart. It gave you the opportunity to go long. We hit T1. We then rejected. We came down to neutral again. And then we pushed right back off of that green level into T2. So we did hit T2 to the upside. So if you're long over the neutral, it worked out great. And then you got the opportunity to then go short. This also worked earlier in the week to T1, and it worked later in the week. So like on Friday, if you were using your neutral strategy, worked again to the downside. So this worked really, really great. Over here on the Qs, same thing. The first thing in the week, we pulled back, we hit T1. It worked really well, and just like it's supposed to be, support until proven otherwise, it then pushed up, gave you the long signal above neutral, and then we hit T1, we rejected. Basically, you could see the levels worked really, really well. Now, going into this week, this is your new neutral strategy starting for this week. These are new levels. Please just, freeze the screen here, if you will, or come back to it. You can apply these levels to your charts. And if you don't know how to trade the neutral strategy, I have a quick video here on YouTube that helps you understand how we trade this, okay? All right, so moving on, now we're going to go ahead and take this chart and put it away. We're going to open up TradingView, okay, and we're going to come over to the SPY. Now, this is the bigger picture, and again, I really like for anyone that's first coming in and listening to me for the first time. I am very confident in my analysis. It's pretty spot on, and I like to keep the notes on a weekly basis. But we are using a quarterly chart. There's a couple things that I want to point out here that I always point out is that in the event, for some reason in 2024, we get a big pullback. I really want you to be aware of these long term levels that I'm giving you. And the reason why I say that is because I've been coaching for many years, and during any kind of surprise in the market, people tend to freeze up and they forget about what I'm teaching. So I just have to reiterate over and over and over. If you find yourself in a day where things are just like, holy cow, we haven't seen this in a very long time, where is price going? Don't freeze up. Remember this video right here, okay? The quarterly, what is important going into this is understanding where your support is from a mid and then where your support is long term. And you'll notice that on this quarterly chart, every candle represents a quarter, and every time we come down into the cloud, it's been a great buying opportunity. And you could see that price, the divergence between price right now and where the cloud is, that's quite some distance. Matter of fact, that comes in around $440, and the current price of SPY is 509. So, yes, that would be a significant pullback. And yes, the majority of traders would probably be sort of like a deer in the headlights. But I don't want you to forget, not only do we have an inside and up formation, we have, the idea is to line up with these formations. This is where we're looking at institutions buying. But it also, you have the 9 EMA there, and then you have some Fibonacci's that also make sense there. So a lot of confluence. Just want to make sure that everybody knows where these levels are. Now, last week we said a new high and the 515 target was hit. Bravo, right? We hit. Price closed lower than last week's close. The overall week closed inside. This is the second week out of 19 that a candle closed inside. We have 18 days until the quarter closes. The quarter high is in. And, again, I just want to make sure that you understand I'm not looking for kudos of calling a high or a low. That's not the point. What I'm looking at is structure, and I can be wrong, and I'm not wrong until price closes above that high. Okay. The quarter high is in until it's not. 500 is this week's support. Long term support was 492 by 476. All right. Update today, the 17th. As expected, a lower high this past week, and the structure is now an inside and down formation. If you don't know what that means, please watch the video here on YouTube. It's very quick and to the point. This is the structure that we are using to line ourselves up with institutional buying and or selling. This Wednesday is FOMC. The rate decision, the levels remain the same as the previous week. All right. So again, use the same levels that we talked about last week. Our next chart is going to be the QQQ, and instead of spending too much time on this, it's the same way. Your quarterly cloud is support until proven otherwise. We have some Fibonacci's on here. And again, I would encourage you to read all the notes and just see how well we do at analyzing the overall market. Last week, new high 447 was hit, and this was our levels that we were looking for. We finally hit those. Now, again, I say the high is in for the quarter until I'm wrong. Weekly support at 431 and 429. Long-term support 423 and 407. This week, March 17th, as expected, a lower high this past week. The structure on the week is now an inside and down. Again, please watch that video here on YouTube to understand what I'm talking about. FOMC and rate decision this Wednesday, same levels as previous week. Basically the same notes that I just had on the SPY. All right, moving on down here, let's go ahead and check out the dollar DXY when using TradingView. We're not going to use a quarterly chart. We are actually going to use a weekly chart. Now, this is the same exact zones I've been using for over a year. They've been absolutely spot on, and my only update is this. We bounced out of demand. We hit the 618. We could not break what is considered the downtrend here. If we had closed over this, this would have been a break of that downtrend, and I would be really cautious, right? Now, notice that once we came up and broke down from there, we came into, and I want to zoom in so that you understand, okay, proof of concept here. We identified this a couple weeks ago. We identified it last week, and I said, look, we're coming into an inside and up formation. Look for the bounce. That's exactly what happened. Price bounced on the dollar up into the cloud. The cloud is resistance until proven otherwise. Far as this week is concerned, price bounced as expected and now a stall at the weekly cloud. Your major levels that I want you to concentrate on, especially because we have a rate decision coming up, are these two levels, 105 and 102. Basically, what I'm saying is we make a new high above here. It's definitely caution. If we break down below 102, then the market continues to be super bullish. Okay. So, again, what do you do between these? You don't do anything. You just wait until price gets and can close over one of those levels. Then the cycle changes once again. Let's go ahead and move on. The next thing we're going to be looking at is the 10-year treasury or the TNX. Let's go ahead and take a look at this. I put TX in, sorry about that. All right, so once again, this has been spot on for the entire year. I've not changed anything. I told you that price would, since January, range from this zone here. There's a green level here, and I said it would range into this red zone here. Okay, that's exactly what's going on. Now, we had a pretty strong week last week in the TNX, and this does raise some caution. Okay, now, again, your major levels, once again, on the TNX is if we close up and over 4.5 this week, or if we break back down below 3.8. Okay, so all we're doing is using the top end of this zone, and we're using the front end of this zone here. Okay, those are your major levels going into the TNX. Let's talk about the skew just for a few minutes. And I'll spare you the 5 minutes that I usually do on the skew. Try to make this a lot calmer, right? But we do understand that when the skew is up here, we start to protect ourselves, okay? In 2023, we started this whole thing back in March. It's almost been an entire year where we stayed here to the top side. And this throws a lot of traders off who use the skew, P-call, all those type of things. It kind of throws your sentiment off. But we found out really quickly that we wanted to be long when price came down into this level on the skew, which is around 132, 130, somewhere in there. Now, once upon a time, and for a very long time, anytime the skew came into this lower green level, this is where your extreme fear hits the market. This is where the majority of participants are in puts. This is where I want to start looking to get long. Now, my overall thought, and I guess you could call it a prediction, was that after the first quarter, at some time in the second quarter, we'd be looking for prices to pull back here. That means this entire rally that we've had at some point will start to look like this to the downside. Lots of fear will come in. Lots of people will start buying a lot of puts. And basically, the market is going to crash. That's the idea. That's what everybody will start talking about. And then at this point, this is where we want to really lay on the gas. As of right now, we've been laying on the gas when we come into here. And I still want to follow that, and I can still be wrong. Maybe the entire year stays bullish. Maybe every month closes up higher than the previous month. I don't know that yet. So we have to execute the levels that have been working. This level down here has been working. And again, it's not broken until I see at least 2 weeks close underneath this level on the skew. Your current skew again is at 138. It did drop a little bit, which tells me that traders out there are starting to get just a tad bit more fearful and maybe starting to protect themselves just a little bit more. That leads me into the fear and greed, which is at 70. It has come back just 1 point. It was, it was over here for a couple weeks and then it came back into greed, which again tells me that traders are not as extremely greedy and they're starting to protect themselves a little bit or maybe sitting on the sidelines. This is really important when we're looking at the overall market because you'll start to see that all the sentiment comes together. Let's come over here into the ES futures. We're going to look at our charts, if you will, on the, and again, this is for the room especially. I am using the M24, and the reason why I'm doing this is because Thinkorswim has just made it really difficult over the last couple of years for some reason. They when they do their contract rollovers, price the structure. Although if I type ES in here, okay, we're going to have the same number up here. But if you look closely, the issue, right, when I put in M24, you don't have any kind of history over here, okay? And but what is important is that this is the real structure, right? If I were to type in just ES futures, it's going to show you that we made a new high and that we closed down. It's not the structure is just not right. Okay. And so therefore I'm using the ESM. I do have this also charted on just ES futures. Totally up to you guys. You can use last week's levels if you want to, but I am using the M on the ES and the Nasdaq going into this week because once again, this is what the structure actually looks like, and this is the structure that I want to follow. Now, what I did this week is really help you guys out to understand where my mind is at. And I'm going to go over each one of these for you really quickly. So, inside candle. This candle here closed inside this candle. Now, my definition of inside may be different than the masses out there, but once again, we're trading supply and demand. We're not trading with the masses. We had the edge on the market. This is an inside candle. This is what we call the down candle. So we have what's called an inside and down formation. I want you to also notice that we have lower highs here, but we have higher lows. That equals a sideways trend. And with Wednesday coming up, FOMC rate decision, even though some traders probably think they already know the answer to this, and some of them will be validated. Nobody really knows what's going to happen in the market. But what I do know is that when we get inside and down formations, they tend to lead to inside and up formations. Your inside and up formation is here, and just understand that I put the trendy buy zone in this area. Now, we could find a bounce around 51.23 or between 49.89. Let's just call it 5,000 in this level. This is a pretty big buy zone. We have a lot of confluence here using the 9 EMA. Remember, when price comes back to the 9, we're always looking for some sort of bounce here. Okay, so confluence, inside and up formation here, 9 EMA. And if we go back and we measure the overall range itself from here to here, we have some Fibonacci confluence right there. So I really like this zone. If the market were to pull back there this week, it would definitely make my SPY puts profitable, and also this is just where I'd be looking at that relief bounce to come back into the market. Now let's come over here on the daily. This is going to be the daily on the ES futures. And remember, guys, these triggers, although they are here and I'm using the same methodology, what I want you to do is when price comes into the levels, is that you go to a smaller time frame than the day, typically like anywhere from a 5 minute to maybe like a 30 minute, somewhere in there. But once we get there, we look for our indicators to give us that buy signal or that short signal, depending on where we are. Now, this resistance level is lined up with your trendy edges. Just underneath here, we have the future monthly, and here we have the WE. This is resistance until proven otherwise. To the downside, you'll notice if I zoom in here, we have an inside and up formation. We're identifying that with your trigger long there. And then this trigger long comes in underneath that formation. So basically, we just have a zone, if you will, right in this area. If this zone doesn't work, let's say that Wednesday is really, again, hypothetical, gets nasty, and the rate or the velocity of the move down is super strong and it just, is coming at you, and it's like, okay, I want to get out of the way. Just identify over here on the left-hand side your other zones. We would have our trendy edge down here at 49.60. And then over here, I personally like this candle and these two candles better than this area. And the reason why I say that is when price goes bid to the upside or your out candle. And when I say out, let's say that this is your candle inside, the out candle is very, very important. Yes, it looks pretty decent, but it's pretty weak. I mean, once we hit this high over here, things have really gotten choppy and they're just not as exciting as they used to be. Traders get exhausted even when prices are going to the upside. So again, this zone can definitely work as a relief zone, but if for some reason it does not work, use your trendy edge and look for these candles right here as your next support. Moving on over to the 4 hour. Again, I've taken the time here to really throw some arrows on here so you guys can see exactly what we're looking for. Inside and down formation, we're using a 4 hour. This is your supply zone or your trendy sell zone, if you will. This is the inside candle. I've annotated that. Notice that the trendy edges are already there. So everyone always asks about trendy edges and so forth, and the majority of our traders use trendy edges. They are a playing field of supply and demand. So these red and green boxes are manually put on there. I teach you how to find those in our class, but also the trendy edges, like most indicators, it's just a convenience. So, once upon a time, I'm like, okay, I don't want to have to keep going to several different time frames, find these zones, put a bunch of boxes on my charts. So we came up with the trendy edges. Here they are. They're color coded to help you understand what time frames they are on. And again, they are a playing field of supply and demand. So the reason why I put that, notice the trendy edge is already here. I don't need to come in here and find the zone, but I'm going to show it to you, and you already know before the week even ends where your next zones are going to be. Down here, notice we have 3 sets of trendy edges. I just went ahead and annotated that for you. So once again, nice confluence here between 51.72 and 51.22 for a relief bounce. And you'll also notice we actually came into here before the close. And this is why I'm saying tonight I'm looking for a relief bounce on the open. So relief bounce until proven otherwise. And once again, if you don't know what a relief bounce is, please watch the video here on my YouTube. Let's go ahead and go into the Nasdaq really quick. And we'll go over that as well. And this one's kind of fun. I put a lot of annotation on here as well. Inside candle, the down candle. This is your support. I'm using trendy edges. I'm using the 9 EMA. I'm using some Fibonacci. And then underneath that, if for some reason we're in for something that we're not expecting, again, I want you to understand where the trendy buy zone is. And again, support is more of like, hey, if we get down there, I would expect a relief bounce. But if it's sold off, this is where I'm more interested in the buy, okay, for that next cycle. Next thing, we're going to come over here. Let me just make sure I went over all of this. These are extension targets to the upside using Fibonacci's. This is the top until it's not. I'm using a trendy future edge, and that pretty much sums it up on the weekly. Here on the daily, I really broke this down so you can really understand what I'm doing when I put these triggers in here, because I think a lot of people, and even to this day, I still people tell me like, oh, these are support and support or resistant levels, and they're not saying they don't understand what they're saying. Support and resistance is not the same as supply and demand. It's a completely different idea. You trade it completely different. Supply and demand is where we are trying to get the edge on the market by identifying through structure where institutions are buying and selling. Okay. So when you see these triggers on here, they're not just like some support and resistant lines. These are you know, I'm breaking it down and showing you how I do this. So, for example, okay, this is trendy edges, your past and future, right? And so we have current edges that are popping up next week, which is right here, and we have last week's, and then we have a future monthly, and all of it's sitting here, and this is your playing field for the supply zone, okay? Now, coming over here, we have what's called an inside and up formation. This is where we're identifying that structure where institutions are buying. We have our trigger long. Again, go to a smaller time frame to execute this. And here's a note. Although this is an inside and up, you have to ask yourself if this looks like a strong move out. And I just demonstrated that to you on the ES futures. I mean, it looks decent, right? And price hasn't come back here yet. So yes, you can get a relief bounce. But when I look over here, I see this and I see these two candles. These two candles on the ES futures are actually my favorite candles where I'd expect more of a better bounce, if you would. So not saying this zone's not going to work, and we see these zones work all the time, but my favorite spot or my better clearance rack sell, if you will, for my favorite item is actually further down here, all right, in this area. So I just want to make sure everybody understands that. And then let's see, stronger move. I pointed that out, inside and up. This is the move out. This is your inside and down. And I'm using the wick from this down pressure. So what I'm doing is I'm combining a zone with another zone. So you have an inside and down right there. Okay. So these are your two major zones coming into the daily. All right, let's go over to the 4 hour once again. Just identifying what you're seeing here. These are your edges, all right, and all of those make up the supply zone that we found here on the 4 hour. And then over here, we have a trendy edge identifying this zone. Now, the cool thing in the educational piece to this chart itself is that this is your inside and up formation. Price leaves here. We get the buy signal. You look to go long. Notice that the cloud holds, it holds, it holds. It starts to break down. All right. Now, a lot of traders, which you'll hear them say out there, and a lot of traders who teach this, which is just, hands down, I think just asinine. And that's the difference between supply and demand traders and a lot of traders who are like, hey, it broke the EMA, so we can't get long. That is where they're missing things. You need to be looking for demand zones when we break EMAs. So when we break EMAs, notice that price is breaking down and it comes right into our inside and up formation. It then goes bid. This is where we look to go long out of a zone. We reclaim the cloud, things start to look great, and we move to the upside. Now, why am I showing you this? Well, again, proof of concept always. We're coming back into the zone, it's working. We came back to this area here. You'll notice if I zoom in, there is a really big candle there, okay, coming out of that green box. Well, this price right here, this arrow came back to this inside and up formation, or this nice big volume candle there, comes right into it, moves again. Now, why is this important? Because we can say, I like to tell everybody, like, close your eyes, imagine your favorite product that you like to buy, and you go to a brick and mortar. Every time you buy it, that's demand, right? You're like, well, I'm not willing to pay for this, my favorite product, at these prices. I'm going to wait until it comes back to the clearance rack sell. Well, this is the clearance rack, folks. And every time it's come back here, buyers are willing to buy, right? So say that your favorite product down here is $50 and up here it's 100 and you're not willing to buy at 100, so you buy it at 50. And then you're like, well, I bought a couple at 50 and it comes back down. You're like, man, I can't wait to get it at 50. And, the guy that owns the store or the gal that owns the store is like, well, instead of 50, I'll sell it to you for 55. And you're like, well, that's close enough. I'll buy it. Boom. They buy it. So what we're doing is, once again, we're making higher lows from a demand zone because the demand is there to buy the product, and not necessarily will you always get that $50 price tag, right? But you do at times when there's not enough buyers you do get product at a cheaper cost. And that's all that's going on. And when we think about tech and we think about the Nasdaq, I mean, this is one of my favorite stores, and we want cheaper prices. All right. So again, this is your zone coming into this week on the 4 hour where people are willing to buy. And up here, this is going to be your supply zone. In this area, I would expect sellers to come in. And if I'm right, and I could be totally wrong, and it's okay because I'm net long with hedges. All right. So that's an important thing. If you're new at trading, what that means, guys, that my net liquidity is hyper focused on the long side, and I have some hedges to the downside. Okay. So that's all. So even if I'm wrong and price explodes after a rate decision and comes up here, that means my portfolio is going to be green. All right. So I'm happy. It's okay if I'm wrong. So once again, these are the levels until they're not the levels. If we break down below this level, I want you to go to the higher time frame and be looking for the levels we talked about on the weekly. All right, so that's your ES and your Nasdaq. Looking at your futures. Other than that, there's not much more that I need to discuss on this review of this week. I do want to say I really appreciate everybody's support. Thank you so much. The YouTube has really taken off this year. It's worked out, and I know it doesn't look like a whole lot, but I didn't put a lot of time into it. But you guys are really what makes it special. You give me that support. You watch the videos. You give me the likes. You give me your feedback. Last week, I had somebody say, "Hey, John, stop saying NVIDIA and say NVIDIA." Now, I could get, to the point where I'm like, "Oh, really?" But that's true. I was pronouncing it wrong. I pronounce a lot of words wrong. So I really appreciate even that kind of feedback. I'm not going to get offended. Just, my whole thing is concentrate on the chart when I'm teaching you. And sometimes if my accent throws things off, then I apologize. But I really appreciate you. Have a wonderful day. We'll see you guys in the room. And again, this is my last broad market analysis that I'm just going to be throwing out here. But I will be sending the link here in the rooms for you guys here in the Trinity family to take advantage of over the weekend.